if you place two bars of chocolate in front of a person, right? And one's got actual cocoa and one's got cocoa butter equivalent, which has got nothing to do with the cocoa plant. Would you be able to tell the difference? Not an expert, just a general person. Would you think they'll be able to tell the difference between the two?
No. A lot of regulation is being formed around how much of it you can use. So US, for example, says that you can't use any equivalents
and still call it chocolate. Basically.
And still call it chocolate.
Right.
Whereas Europe and India, typically in milk chocolate, allow about till 5% of the total composition to be a CBE or a cocoa butter equivalent.
Right. This episode of Taking Stock is brought to you by Paterson. Okay, hello and welcome to another episode of Taking Stock. This is a weekly podcast where every week we pick one company, one stock and dive into it. And this week we're going to be talking about the company that is pivotal in, I think, everybody's favorite chocolate, right? Every occasion there has to be Ferrero Rochers. And I think this company is pivotal or a key ingredient in that chocolate. Is that right to say?
Correct.
Perfect. So, okay, I think the thing that we should start with, right, is over the last few years, prices of chocolates have gone up globally, right? What's happened there?
So, I actually realized this when I was ordering a cake.
Okay.
And the price was too high. And I told this woman that, listen, your cakes are too costly. And she's like, hey, the price of chocolate has gone up. You don't know. And I'm like, really? That's when I realized.
Yeah, because I mean, chocolates is one thing which you probably don't realize as much, right?
Yeah.
The price for dairy milks remained the same since we were kids, maybe. I'm assuming they reduced the quantity of the chocolate rather than increasing the price.
They reduced the size of the package itself. So that makes you feel like the price is the same, but it's really not.
But why has chocolate prices gone up in the last few years?
So essentially what's happened is there has been a shortage in cocoa.
Okay.
And this has been the worst shortage since like the 1970s.
Okay.
So it's like a very grave shortage where prices in 2023 were at roughly $3,000 a kg. And these have gone to about $13,000 as of December 2024.
That's almost 4 times or whatever.
2 years.
So is cocoa grown in India?
No, it's not grown in India. 60% of it is actually produced in Africa.
Okay.
And that's why the problem, because there is a concentration in terms of where the production is. So two major countries that produce it are Ivory Coast and Ghana.
So once the prices go high enough, Trump's going to colonize one of the African nations.
I'll tell you why not. It's an interesting point. I'll come back to that. But essentially what's happened in West Africa, 2-3 factors that have resulted in this problem. One is climate change.
Okay.
So cocoa best grows in a very narrow equatorial band. So it doesn't grow throughout the world. It grows, that's why, in a very narrow range on the entire planet. And it requires stable rainfall. So what happened in 2023 was that there was very heavy rainfall.
Right.
And in 2024, there was a severe drought condition.
Understood.
So both of these extremes are not okay for cocoa production. They're not really suitable for it. Second is, there was a disease. There were 2 diseases that were prevalent in like plant diseases. There's one called black pot disease.
Okay.
And the other one is called a cocoa swollen.
So it's like a plant plague.
Yeah. Like it's called a swollen shoot virus.
Okay.
And it apparently in northwest Ghana, it destroyed 80% of the crop of cocoa. So that's a large number for a country that dominates world production. The other thing that happened is because of this volatility, a lot of the small farmers, which are predominantly involved in growing cocoa, shifted to other cash crops because they can't really deal with this volatility on a regular basis. Similarly, a lot of processors also shut down because cocoa, once you remove the pod, it requires a lot of processing for you to get to the end chocolate. It's not really pluck out and eat type of a situation. So the processors also ended up shutting down because of a lot of working capital requirements and stuff. And lastly, there's a lot of illegal gold mining happening in that part of Africa. And gold mining requires release of chemicals like arsenic, lead, mercury, which go into the soil and then again harm the crop.
Right.
So all of these factors together have resulted in one of the worst shortages or crisis when it comes to cocoa in over a century now. So that is primarily why, and now prices are slowly stabilizing. It's not that the situation is back to normal. But from $13,000 to $14,000, it's still come down just a little bit. We are very far from the average of $3,000 historically.
So, I mean, the company that we're talking about, I don't think we mentioned, but the company we're talking about is Manorama, right? And so, how did essentially Manorama get affected by this shortage and eventually the rise in prices of cocoa?
So it actually benefited from it.
Okay.
Manorama doesn't have much to do with cocoa directly.
Okay.
It does not produce cocoa, it does not process cocoa, it doesn't do any of that.
Okay.
It produces something called a cocoa butter equivalent.
Okay.
Which is a substitute, or which is a product which is very similar to cocoa.
Okay.
Not cocoa, but cocoa butter.
Right.
So we'll sort of take a step back.
Right.
What happens is when you, there's a cocoa pod, right, which is on the tree. Now you harvest that, you ferment it, then beans come out of it. Those beans are dried, then they're roasted, then they're ground. Once they're ground, it forms a very thick liquid, which is called
Cocoa butter.
no, cocoa liquor.
Okay.
It's not alcoholic, but it's
Right,
called
right,
cocoa
cocoa
liquor.
liquor,
And then the cocoa liquor is pressed under pressure. When it's pressed, the oil separates.
Okay.
That oil separation, or that separated oil, is called cocoa butter.
Okay.
And what is left in the middle is called a cake.
Right.
Now that cake is something which, without the oil, is then converted into a dry powder, which is cocoa powder. So when you make chocolates, the taste comes from the powder, but the feeling of
The texture
it
or whatever.
melting in your mouth,
That comes from the cake.
that comes from the cocoa butter. So
Understood.
the two important ingredients in chocolate are cocoa solids or cocoa powder and cocoa butter. Now, there was a larger shortage of cocoa butter because cocoa butter is not only used in chocolates but is also used in body wash, moisturizers,
Right.
cosmetics, lip balms, etc. So it has a wider range of
Yeah, I
uses.
saw along with Ferrero Rocher, Body Shop is one of their major clients, consumers, whatever you want to call it.
So
right?
if you're using like body butter, for example,
Right.
and it's shea butter or cocoa butter is where this
Right,
is used.
right.
So when there was a cocoa shortage, cocoa butter shortage was even greater than the cocoa shortage. And this company, Manorama, makes cocoa butter equivalents.
So they've been making it before the shortage, and the shortage just sort of played into their hands.
So the shortage was a chance of, so it was a lucky streak,
Right,
sort
right,
of a
right.
lucky strike sort of a situation, right? They've been making cocoa butter equivalents, which is also a growing market.
Right.
However, because of the shortage in cocoa butter, equivalents,
The
shot up.
demand increased, yeah. But so what is cocoa butter equivalents? It's got nothing to do with chocolate, it's got nothing to do with the cocoa plant.
Yeah, so there is, so cocoa butter.
We're really not making this easy for anybody, no?
No, it's really interesting because cocoa butter essentially is, at the end of it, it's oil, right? It's fats. Now, these fats come from, look at it as there is milk-based butter, there is cocoa butter, there is other plant-based butter as well. So, palm oil also gives you some amount of fat. There is shea butter as well, which we mentioned in one of the whatever. So, there are several types of butter. However, cocoa butter is very unique. Now, why is it unique? Because we'll have to again sort of make it a little complicated, but I think it's worth the time. So, cocoa butter is essentially made of something known as triglycerides.
Okay.
So, essentially, there's a glycerol molecule which is connected with 3 fatty acids. 3 fatty acids on a glycerol molecule.
Okay.
In the middle is something known as oleic acid.
Okay.
On two sides of it are monosaturated fats. Bad for the body, monosaturated fats. So there are 3 types of these molecules. 3 types of triglycerides. They come in different compositions. We can leave out the complexity, but in essence, one is a POP. It's called palmitic, oleic acid, and stearic. Then there is a SOS and there is a POS. So POP, SOS, POS. Cocoa butter's composition is 15, 38, 28. Palm oil is very heavy on POP. Shea butter,
Very
heavy on SOS.
SOS, yeah.
This is very uniquely placed where it has high POS composition as well. And because of this composition, cocoa butter has the tendency to melt at body temperature. So at room temperature, it makes a crackling sound when you break it. But at body temperature, it melts. So this is a very unique composition.
Correct.
So to achieve this, you can't directly say, I will use palm oil. You can't say, I will use shea butter. Because they won't give you the same feel. And hence, if you use it in chocolate, it won't feel like chocolate anymore. Either it will be too less soluble, it will feel like a little oily in your mouth, it will melt too fast or something or the other. It won't give you that richness maybe, or a lot of things can go wrong. So essentially, cocoa butter equivalents are made using. Now you take a palm oil, for example, you take a shea butter, and they also have a varied composition between POP, POS, and SOS.
Right.
Now that varied composition, what they do is essentially there's a process through which they break it down.
Okay.
So they separate the POP, they'll separate the SOS, they'll separate the POS, then they'll recombine everything together.
Understood.
And they'll try to recombine it in a manner that cocoa butter equivalent is formed.
Understood. With the right compositions, etc., etc.
Yeah. But that is very, very hard to achieve. And hence Manorama is a very special company, or any company making cocoa butter equivalent becomes special because POS is very rarely occurring in natural cases.
Right.
Unless it is in one of the seeds. It's called Elipe butter. Elipe seeds, for example. They come from Malaysia.
Okay.
But they grow or they seed only once in 3 to 5 years. So
so you can't have constant supply. Yeah.
So while there is a shortage of cocoa butter, there is a shortage of stuff that will also provide POS.
Understood.
And hence cocoa butter equivalent prices also shot up.
Right. So, okay, I have I'm going to dumb this down a little bit, right? So let's say if you place 2 bars of chocolate in front of a person, right? And one's got actual cocoa and one's got cocoa butter equivalent, which has got nothing to do with the cocoa plant, would you be able to tell the difference? Not an expert, just a general person. Would you think they'll be able to tell the difference between the two?
No.
So it's essentially gives you the same taste, texture, everything.
It doesn't have anything to do with taste. So the taste is in the powder.
Understood.
This is just to do with the texture.
Right.
And hence you wouldn't necessarily know.
Understood.
But a lot of regulation is being formed around how much of it you can use. So US, for example, says that you can't use any equivalents
and still call it chocolate.
And still call it chocolate.
Right.
If you want to, then you call it something else. It's not chocolate anymore.
Correct.
Whereas Europe and India typically in milk chocolate allow about till 5%.
Understood.
Of the total composition to be a CBE or a cocoa butter equivalent.
Right.
Essentially, if you look at milk chocolate, the condition is that in milk chocolate you need about, say, 25% chocolate. 25% chocolate, cocoa. This would typically be divided between 12.5% cocoa solids and 12.5% cocoa butter.
Right.
Roughly.
Correct.
It can vary, but roughly this is the formation. Now, if you replace the 12.5% cocoa butter with 5% cocoa butter equivalent,
right,
you are effectively replacing 40% of the composition of cocoa butter.
Correct.
But you wouldn't realize.
Understood. So okay, so this is, you're talking about India, right? But like how in the US it's not allowed.
Yeah.
So what happens across the world? Are people going to eventually, or are companies going to start replacing cocoa butter with cocoa butter equivalent?
They can't. So basically, if you look at the customer list of this company,
right,
most of the chocolate names are European names.
Understood. So in Europe, it's a little more flexible compared to the US.
Europe allows 5%. India allows 5%. So in chocolates, you can use up to 5%. But chocolate's not the only market for these guys.
Correct.
There is no regulation around how much you can use in cosmetics. So if you're buying body butter, which is cocoa butter,
right,
they can have 100% cocoa butter equivalent as well. There is no regulation around that because you're not consuming it.
Correct. So I'm assuming over here, what makes Manorama as a company extremely unique is, as you said, that in India, cocoa doesn't grow in India.
Yeah.
So any cocoa or any chocolates or anything that uses cocoa in India essentially is imported.
Yeah.
Right. But Manorama is now making CBE or cocoa butter equivalent in India.
Yeah.
Right. So how?
So India has also got an advantage there.
Right.
Where what are the raw materials you can utilize to make cocoa butter equivalents? Because at the end of it, that fat also has to come from somewhere. The POP, POS,
right.
It either has to come from, there's a tree called sal or shal, alternatively pronounced, which grows a lot towards Chhattisgarh and those areas.
Right.
They leave out a seed, which is pretty useless when it comes to consumption because it's acidic. It is very hard it needs boiling for some 12 hours to be able to consume it. Stuff like that. So they usually just grind it, mix it into flour and consume it.
Okay.
However, these seeds are collected by Adivasis. Manorama sources it from the Adivasis.
Right.
And then converts this into this one.
CBE.
CBE.
Okay.
So one of the ingredients. So they take palm.
Right.
They take sal seeds or shea nuts or mango seeds,
Right.
which you throw away.
Correct.
Or kokum seeds.
Okay.
So all of these plants are also very high either in POP, POS or SOS,
Right.
which contribute to
Making
their
CBE.
sourcing.
Understood.
So Manorama, the advantage is that one, they're in a country like India where there are 4 or 5 other products available as substitutes to get these butters from, or ingredients from,
Right.
not butters, to recompose and make
Correct.
CBE. Second advantage that they're able to source it directly from the Adivasis,
Right.
rather than buying it from the open market,
Correct.
which makes it benefiting because they're able to cut costs by 15-20%.
Right.
Third is they're also processing or fixing up plants for milling the seeds. So the seed is then actually crushed and the oil is separated, right? So like I said, cocoa, for example, there has to be a solid and there is a butter portion. Every seed produces a solid and a butter portion.
Understood.
Even a mango seed, if you put in,
Correct.
it will produce solid, which is cake. Wrongly called cake.
I know, but yeah.
That is cake, and there is a butter.
Right.
Usually, the cake is then used in cattle feed.
Right.
So it's all fed to cows and buffaloes.
Correct. Correct.
So Manorama has got the advantage of also being able to process the seed and convert it into cake and butter.
Right.
So that gives them a unique advantage compared to other CBE manufacturers who would typically buy these different butters.
The price would be much higher and everything, right?
So it gives them a very high cost advantage as well.
Correct. This episode of Taking Stock is brought to you by Paterson. Because of the shortage, right? The shortage has happened, the cocoa shortage that we started with has happened in the last 3-4 years, I'm assuming. So this has what's caused a massive spike in Manorama's sales.
To an extent, yes. But I think there are a lot of structural reasons to it as well, and not just the spike.
Okay.
The spike in price came as a luck.
Right. But they were doing well irrespective.
They had started doing well, say 5 years back,
right.
Post-COVID, is when they realized that I think there was already a market for it. But they were not really able to cater to that demand. So there was a supply shortage.
Right.
So they increased the demand and increased the capacity, and they managed to get the product out. So one of the factors that resulted in growth was the capacity constraint going away. Second is backward integration all the way.
Okay.
So right from being able to process the seed, not only in India, but they've also put a backward integrated plant in Africa.
Okay.
Where they're able to process shea seeds.
Right.
And they're able to convert that into shea butter. That comes to the Visakhapatnam port. From the port, it goes to Chhattisgarh into their factory, and that's where they mill it.
Right.
So they're able to do that level of backward integration, which has helped. The third thing which helped also was that, and all this backward integration helps reduce price.
Correct.
Right. So they've been able to do that. And third, they've also been able to sort of change their product mix. So rather than offering a very standardized CBE product, which is, hey, this is the composition, I put it in whatever variation, and I've given you cocoa butter equivalent in whatever form,
right?
In a just a raw form. Instead of that, they're able to go one step ahead and say that you require it for a cream biscuit, I will deliver that.
Okay.
You require it for a coating, I will deliver that.
Right.
You require it for the chocolate itself, I'll deliver a different product. So they're becoming very product specific, which is a value add, which also helps them gain margin on that side. Not just margin, but also gain pricing competitiveness or better realizations.
Correct.
And lastly, I think they've been able to do a lot of geographic expansion. So earlier their market would only primarily be India, because as you said, India does not make cocoa, but we need cocoa butter equivalents.
Correct.
So India was majority market, but now Europe is majority market. And they're expanding heavily into countries like Russia, for example. Russia has nothing to do with either cocoa production because it's so far from the equator.
Correct.
Nor plants that will yield seeds which are able to make oils.
Right.
So these are very tropical region plants. So anybody who's not in the tropical region will require production or help from these guys.
So essentially what you're saying is that Manorama has gone extremely heavy in a few aspects, right? One is your forward-backward integration. They are now catering to different countries, different markets. They've created multiple. So they are essentially on a expansion spree, essentially, right? And you see this getting bigger because when you say the final use case of it, right? I'm just looking at it from a layman's perspective that when you say chocolates or cakes or cream biscuits or whatever, or whether it's cosmetics, these are two things which are not going away anywhere, right? It's only going to keep increasing.
You'll actually be surprised. There was a demand took a hit for chocolates
Okay.
when the prices rose.
Which happens with everything, I would assume, no?
I mean, no, that goes up. I mean, you wouldn't think of like chocolates being lesser or whatever, but I think there is a price sensitive market to it as well.
I'm sure. I mean, I'm sure we probably wouldn't realize it.
Yeah. Or products which do well in such times, and that's why demand doesn't directly take a hit as a conscious choice.
Right.
But it does as a subconscious choice because you start buying products which are named, for example, in India, Choco.
Huh.
Or they're called chocolate tea.
So I was in fact reading about this, I think just today or yesterday, right? Where a lot of, so the same thing which is happening in India is where a lot of these biscuit brands, they're supposed to call it cream biscuit.
Yeah.
But according to regulations, if you're calling it cream biscuit, it needs to have a certain amount or certain percentage of cream. So now they're starting to call it as creme biscuits.
Yeah.
They're spelling it CREME.
Which sounds even more premium than cream.
Like the French, whatever you call it, right? But yeah, I think that's what's happening in a lot of places, right? With butter, with a lot of different products. This episode of Taking Stock is brought to you by Paterson. So where do you see Manorama going forward? I mean, I'm sure there are certain plans that they have announced. You also, as somebody who's researched about the company and the market, what do you see happening in the next few years?
So see, in the last 3 years, essentially, if you have to just sum up, they've expanded capacity by about 40% CAGR.
Okay.
So they had a capacity of, and this is capacity of something known as fractionation. Fractionation is essentially separating POP, POS and SOS from oil.
Right.
And once you've separated that, then you combine it, right? So that capacity will determine how much capacity of an end product you are making.
Okay.
Now, if you increase the capacity to if you sort of just take a step back and look at the seed processing capacity, it will be 90,000 tons.
Okay.
But this will be 40,000 tons.
Okay.
So the capacity to look at is this, which determines how much volume you are able to produce. So this they've been able to grow at a 40% CAGR.
Right.
Revenue has also gone up by 40% CAGR.
Right.
Right. So they did about 770 crore in revenue in FY25. FY26 they had earlier guided for 1150 crore. But last quarter they did so phenomenally well again that they increased their guidance and they said they'll do 1300 crore in revenue.
Okay.
And
what was the year before that? 550 you said?
770.
770. And 770 and do 1300. So, yeah, okay.
So that's a 70% jump in revenue. Similarly, margins have also gone up massively. So FY22 they were doing margins of about 14%.
Right.
This has gone to 25%.
Right.
Now this has happened again because of backward integration.
Correct.
Because of a changing product mix, and because in general realization for cocoa butter equivalents is also going up because cocoa shortage is there.
Correct.
So there is excessive demand for cocoa butter equivalents, and hence the prices also shoot up.
Right.
So that has been in their favor. If I have to now sort of look at what they're saying about the future, they're investing heavily again. They're investing about 500 crores in capacity expansion over the next 3 years. And this capacity expansion is both at a backward integration level and forward integration level. So they're setting up something which allows them to, once the cocoa butter also comes out or any butter comes out, they have to refine the butter. So there is a refining plant for that oil also required. Distillation process, filtering process, etc. is required. So they're doing more forward and more backward. If I have to again look at just the fractionation capacity, they're adding about 75,000 tons.
And it's at 40,000 right now.
It's at roughly
90,000 or 40,000. You said the number, no?
I said the number.
Yeah, I think it was 40,000.
Yeah, it was 40,000.
Yeah.
So to 40,000, what is happening is that on 40, they're adding another 30% in this year itself by debottlenecking.
Right.
Simple plant process changes.
Correct.
Which will take it to 52,000 by FY26.
Right.
To that, 75,000 will get added. So it will become 1,27,000 MTPA by 3 years from now. So FY29.
Right.
Essentially, you're looking at a 35% CAGR.
Understood. So, I mean, I've got a doubt here, right? That this cocoa shortage that we're talking about, which is sort of played into their hands and helped them increase their demand, this is not, as you said, it's already sort of slowly stabilizing. I know it's not reached a $3,000 number yet, but it is a temporary thing, right? Like most other sort of whatever, right? Agricultural cycles that you might see. this will at some point, maybe 1 year from now, maybe 5 years from now, maybe 10 years from now, will stabilize again. Right? But Manorama at that point would have doubled, tripled the capacity. So isn't that a risk?
That is a risk. So, see, the way I look at it, growth at a revenue level can, maybe there is stability, or you can expect the same amount of momentum to continue on the volume side. Because cocoa butter equivalent, when you talk about chocolates, allowed limit is only 5%,
Right.
whether in Europe or in India.
Right.
Cosmetic demand is rising.
Correct.
And these guys are able to cater to that demand in multiple specialty products. So I don't see volume estimates getting hampered.
Correct.
Realization may take a hit.
Right.
So there is a downward risk when it comes to realization. On the margin front, if they were a purely trading company where they're buying solid butters butters from places and then fractionation and then blending, then their margins would have been severely affected by
Correct.
it. But if you are going backward integrating all the way till seed collection,
Right.
and forward integrating till the time that you're saying that I'll provide you the
Exact
biscuit
product, yeah,
or whatever,
yeah.
right? Not the biscuit, but
The
whatever
exact
you want to produce.
specification that you need. Yeah.
So in that case, you are shielding yourself from that volatility on margins.
Correct.
So while margins right now are at about 25%, there is downward risk. And that downward risk I see is something where it may not go back to 15% historical margins, but may settle somewhere in the middle.
Right.
So if I have to look at the numbers from a 3-year perspective, which they've guided in terms of capacity addition, not in terms of revenue, if I just have to translate that, they can do a 35% CAGR in volume growth
Right.
over the next 3 years. Right? Some downside risk there in terms of realization.
Correct.
If they're able to maintain a 20% margin there 3 years down the line, then you're looking at a PAT of about 600 crore.
Correct.
Currently, the stock trades at a 30 times FY26 valuation. So on a 260 crore, the stock is trading at, giving you a market cap of 8,500 crore. If I have to give it the same multiple, 600 crore at 30 times
Right.
would be about 24,000 crore.
Correct. No, 18,000, no?
Sorry, 18,000 crore.
yeah.
Sorry. Yeah, I rounded off a little bit. 35, I made it 30.
Just 6,000 crores.
Yeah. So anyway, 18,000 crore, which is significantly higher from what is at this point in time. So from a purely theoretical standpoint, extrapolating capacity addition to what can be, the stock has the potential to give you 24,000 crore of market cap from 8,500 now. However, as you rightly pointed out, the risk to it has to be understood well and then factored for. And that risk is in the form of realization and hence margin. So if there is a faltering happening on either of these two factors, then number one, 600 crore won't come. It will probably be 500 crore. And on that 500 crore, I'm just throwing a number. It may not get 30 times, it may get 20 times.
Correct.
But 500 into...
But there is still room for it to grow.
There is a lot of room for error and room to grow.
Correct.
So overall, while it looks like a story which has been plainly because of cocoa shortages, I think there is a very large structural aspect to it, and the cocoa shortage or that cyclical impact is very little.
And I'm sure, I mean, a company that's been in this industry for that many years, right? If they're going through massive expansion plans, they have taken all of these risks into account, right? The risks that we're talking about. Where the shortages might go back to normal and everything will stabilize. I'm sure a company does not put a bet on expanding forward, backward, creating so many processing units, etc., just based on one small cyclical shortage.
Yeah. It's also probably taking advantage of the cyclical shortage, which has given them supernormal numbers. That's the other way of looking at it. But I'm sure, even if cocoa butter demand has to normalize again, so a lot of reports, including JP Morgan, for example, says that it won't go back to 3,000, but it will remain at 6,000.
Correct.
So even if the shortage goes away, there is likely a situation where it remains at elevated levels. Which will anyway keep cocoa butter equivalent prices equivalent.
Fair enough. So I think that we've summed it up without actually spelling it out. But so check out the company. That's all for today. Thank you so much for listening. Please follow, like, share, subscribe, all of that. We do cover a new stock every week. So let us know in the comments which stocks you'd like us to cover in the coming weeks. And thank you so much.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.